3, 2, 1. Hey everybody, it's me, the Einstein of Wall Street. We are here with Trade Like Einstein. I am Peter Tuchman, and we're here on the floor of the New York Stock Exchange in the balcony. History is made in this building every single day. Somebody with my long-term experience, I've been here for 137 years. It is my responsibility to help teach you how to navigate this market successfully. Boom!
Hey everybody, it's me, the Unpacking Wall Street from the floor of the New York Stock Exchange, episode 9762 of What the Heck is Going On. And once again, today can only be classified as a day where you ask yourself the question, what the heck's going on? As I discussed with you yesterday, when you have a day like yesterday, which it could be just like a severe capitulation. Obviously, it was a legitimate sell-off in every possible way. I don't call it a crash. I call it a significant sell-off, closing down 1,200 points on the Dow and 227 points, I think, was the low of the S&P 500, along with a lot of the wind taken out of so many sails down here on every boat in town. That was a sell-off, and we got to respect it. And it is, look, the market is always at risk of that, especially on Fed days. And obviously, the more we analyze it and look into it, obviously, you could really forensically break down Mr. Powell's speech, and it had a lot to do with a lot of things. Some of it to do with Trump and his policies and tariffs, with a little bit of fear there. But I think the biggest thing that took the wind out of the sails was the fact that we were looking for 4 and 4, 25 and 2025 and 2026, 4 cuts in each, and we got cut in half, and that's a big deal, right? When markets get or don't get what they want or what they expect, then they get really angry and they get really pissy, and that's what yesterday was. That was a pissy sell-off in every respect. And so, look, a lot of damage in the market, no, granted, absolutely. And look, when a market is so frothy, so high, above every level of valuation that seems in line, look, we loved it the day before, and we're going to love it again, because I don't think that's the end of the world. I don't see dogs and cats running around, and I haven't seen the bears did peek their heads out of the cave yesterday, where, sitting there with their Doritos and their 7-Eleven Pepsi slushy, and they said, I told you so, and they were right yesterday. I got to give it them, but that was only about 7 times in the whole 2024 where that was a legitimate response to the story. What happened today? There were 2 possible scenarios, as I told you yesterday. When you have these kind of days, when you end at the low, very often you'll see a gap down and you'll see a continued sell side as people digest the information, or when you see a bit of a bounce back and it hit the 65 moving average on the S&P and bounce back above it before they closed the market. I know it continued to sell off after the close, but basically that kind of gives it a sign that we've hit up against some support. That's what the market's all about, is support and resistance on the exponential moving averages. And it hit the 65 on the one-day chart, and it bounced off of that. That means that there was a bid in the market. It took a while to get there. Nobody wanted to step in front of that freight train yesterday. Absolutely not. But at some point, you're going to see the bottom feeders. You're going to see the buyers come in. And that's what happened. We came in this morning, and there were buyers. There were plenty of buyers. And the market rallied beautifully, up a couple hundred points on the Dow. In fact, today we did close out the Dow breaking a 10-day losing streak. That's worth discussing from a psychological perspective. I don't go for the worst Dow, trajectory or sell-off since 1974. That's ridiculous. In 1974, the Dow was trading at 600. It's now trading at 45,000. We hit a record high of 45,000 9 days ago. And look, it started with the UNH sell-off due to the assassination, and all eyes were on UNH, and then it started to careen off of a cliff, and the industrials caught the bad end of the matchstick relative to the rest of the market. So they were selling a lot of the Dows and buying crypto and buying a lot of those pro-Trump stocks that were part of this post-election rally. And so that came to an end yesterday as well. But we came in this morning, market responded well. Super reversal on that one, up 55, 60 handles on the S&P. Midday around 2 o'clock, and then 300 points plus on the Dow. That was a really nice showing. That is a lot to check out. It's important for us to look at the banks, look at the stocks that got sold yesterday and did not bounce back today. Analyze the market for yourself. Look at the names of the stocks that you like, the 4 Ps, the people, the process, the product, and the profitability. Have a shopping list. Do your homework. I'm not going to do your homework for you. But check out the stocks that bounced back today. Check out the ones that did not. Check out the stocks that really broke through all levels yesterday and really took it on the chin, right? Some, obviously, everything got sold off pretty hard. But there were some that got hurt worse, some sectors that got hurt worse, and you're going to have to figure that one out for yourself. But we came in today, beautiful bounce back, up until around 2 o'clock. Once again, as we've seen every day this week, we come into the post at 2 o'clock and we have multiple billions of dollars notional value for sale. We had it on Tuesday, we had it on Wednesday, and we had it today. It got as big as $4 billion on Tuesday and Wednesday. Today is Thursday, and it got as high as $3.7 billion for sale for the close. And that usually impacts the market in a big way. People are getting out of names. They're rotating into other names. However, what you all need to understand is that, and then look, we came in and the rally this morning was also a function of GDP that bounced up a couple points, and that was a good thing. That was positive. However, we are seeing this week is the S&P rebalance, the Super Bowl of all trading days, the biggest trading day of the year. It's the largest quarterly rebalance of that, and we've also got a quad witch option expiration end of year. These are huge days with huge numbers, billions and trillions of dollars coming in and out of the market. And so you see a lot of people what they call leg into the trade on the week before these days happen, especially at year end. Especially at year end, you're going to see huge volume as people prepare themselves, because what is a rebalance? A rebalance is basically you have stocks that are in indexes. Indexes have certain weightings on each stock based on a whole bunch of money under any number of things that make up the stock, right? Their earnings, how many shares outstanding, all that stock make up the weight within an index of that stock. In the Dow, there are 30 stocks. In the S&P 500 stocks. In the Russell 2000 stocks, right? And each stock has a weight. That's how they figure out their weighting within the index. And every quarter, we see it in the S&P, and we see it in the Russell, and we see it in a number of other indexes, MSCI and the Alarian and all these other indexes, where at the end of each quarter, based on where the stock's been trading on the upside or the downside, they need to be reweighted. How is the index weighted? Where for some stocks that are less viable and have less weighting validity in the index, they'll have shares for sale. Other stocks have shares to buy. And so a lot of that action, a lot of that volume is already being legged into by the indexers, by the funds that run the indexes here. And so that's where you're seeing all this big volume. But the big volume this week has been on the sell side, okay? It's been on the sell side, and that's why you're finding, even today, the market is starting to crack, and it's cracked at 2 o'clock, and it felt like you could feel it. It was palpable that even though we had a beautiful rally back this morning, that the market was just going to crack, and I felt like it at 3 o'clock, even though we had taken off about 20 handles of the beautiful rally we had, that we were going to end up in negative territory, and that's where we ended up. If experience has taught me anything, you can see it on the graph. The trajectory on the downside, the way the stock was trading, it felt like it was going to break through into the negative side, and that's exactly what it did. So anyway, where does it leave us today? There is green on the screen. We did close in the negative on the S&P, but I wouldn't get that worried about it. As I said, we broke a 10-day losing streak on the Dow. Tomorrow is Friday. Tomorrow is the Super Bowl of trading. S&P option expiration, all the biggest index rebalances of the year. Coming into the end of the year, you're going to have a lot of volume, a lot of action, a lot of volatility. And hey guys, say hi. Whoa, you're now on my show. What do you say? It's a beautiful thing. It's a beautiful day. There you go. Anyway, so there's going to be a lot of action tomorrow. Is it going to be on the buy side or sell side? I'm not clear. Gauging, look, very often you'll see the sell side come in. It'll sweep the market to a certain extent, and then Friday we're going to see the other side of that trade. And look, they may break them down a little bit in the morning and then take them back when we hit some support, or they may sell them all day long, or they may buy them all day long. I don't know. But we're going to be trading billions and billions of shares. I guarantee you a lot of volatility. It's going to be a great thing. So that's all I have to say today. We're coming into the end of the year. There's still a lot going on. Is the market broken? Is the fact that we are only going to get 2 cuts next year that big a deal? 6 weeks ago, we were looking at four cuts. What significantly changed? I got to go and do that investigation, right? What significantly changed that made the 17 board members in the Federal Reserve decide that they're going to really throw a wrench into this market that's done so well? And does this sell-off continue, or does the market steady itself? It's like a boat in a storm, right? That's where we're at. We're a boat in a storm. Is the market going to steady itself, in the next couple of weeks? I mean, look. My gut is I think we're going to rally them until the end of the year. I think, once again, this is an opportunity. If you didn't like buying those high-flying stocks, that were trading at spectacular valuations 4 days ago. Well, they're on sale now. It's like your favorite leather jacket at Macy's that was $700. You didn't have enough money in your account to buy that. It suddenly goes on sale. And you go run from the theater screaming, fire, fire. No, you walk into the store and you buy it. You buy it for $350. You're thrilled about that. You put it on, you wear it, and you feel good about it. It's not a different jacket. It's just on sale. And the stocks that have been trading here that you didn't love at 900 are trading at 700. The stocks that are at 100 trading at 70. The stocks have had a spectacular run, right? Are trading at a 10, 15% discount. If the story has not fundamentally changed, then go in there and buy those suckers, man. That's all I got to say about that. Have a shopping list. And remember, it's a beautiful day to be alive. Be grateful, be happy, be kind. I love you all. Tomorrow we're going to pick this game up again. This is Trade Like Einstein for Money News Network. Einstein and Ives. Forget about it. Wall Street Global Trading Academy. I'm going to do a special piece about that today, too. I'm sitting in for Nicole Lappin. Ladies and gentlemen, Money News Network. She's on maternity leave. I wish you all the best. Stay tuned for some of my best interviews of the year. And we'll have a nice day. I love you. Have a great day. See you later. Bing bong, shotzi.